Hey everyone, it is Julie here with TipRanks, and today we're taking a look at 3 tech stocks that have buy ratings from top-ranked analysts. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. If you can believe it, there are only 4 days until Christmas Eve, and I know it's easy to slip into that holiday mode already, but there's still a lot of exciting stuff going on in the stock market. Today, we're taking a look at 3 strong buy technology stocks that have picked up buy ratings from 5-star analysts, and we found today's stocks using the Top Analyst Stock Tool. Found under the Ideas tab, at the top, it'll break down all of the buy ratings per sector. We can see energy and technology at the very top. And down below, we can sort further by stocks, focusing in on the technology sector. So we're going to be looking at 3 companies from this list today, taking a quick look at what it is that they do and what analysts are predicting for the stock's future. You can check out the Top Analyst tool over on TipRanks.com and follow along on the TipRanks mobile app as well by using the links in the description down below. Now let's get right into our strong buy tech stocks. First up on our list today, we're looking at Smartsheet. Trading under the ticker SMAR, their stock is currently priced at $48 per share. They've seen year-to-date growth of 23%, but did have this drop off here in June. So looking more recently, we've seen a more steady climb with growth of over 20%. They currently score a 9 out of 10 on the TipRanks Smart Score. Smartsheet designs and develops a cloud-based platform for work management. They are the only platform that can scale from a single project to end-to-end work management, connecting business on a no-code, cloud-based platform where anyone can create the solution they need, backed by the control and security IT requires. They are used from small teams to enterprise-wide deployments and connects with their already existing systems of record and productivity apps that teams use every day. Their platform is used by 90% of the Fortune 100 companies and over 80% of the Fortune 500 companies. They just shared their latest quarterly report on December 7th, where they came out with a big earnings beat, nearly doubling expectations. For their third quarter, they reported revenue of $245.9 million, and that did grow 24% year over year. Earnings per share came in at 16 cents, beating expectations by 7 cents per share. A 5-star analyst from D.A. Davidson just assigned a buy rating for the Smartsheet stock today. They said that recent talks with the company's management give them confidence in Smartsheet's ability to continue leading the work management space. They note that the company is starting to flex their ability to drive margins with scale and that they're starting to dial in on their ability to harvest the big enterprise customers' opportunity. They note that the market has mispriced the stock. Smartsheet comes in as a strong buy with 15 current analyst ratings, breaking down to 13 buys and 2 holds. And their average price target comes in above $55 per share, which would be an upside potential of 16% from current prices. Down below, we can see our more recent ratings coming in following that earnings report. On the low end, we do have a hold with pretty much a flat price target and a high-end price target going north of 29% upside. Our second top analyst tech stock is Monday.com. They trade under the ticker MNDY and are currently priced at $196 per share. And that is impressive when you consider their 52-week range low end was down at $94. They've seen growth of 60% year to date, including growth of nearly 24% in the last 3 months, also scoring a 9 out of 10 on the TipRanks Smart Score. Monday.com is a project management tool. They are a work OS that provides you with all of the no-code building blocks so you can shape your workflows your way. They offer 5 end-to-end products to choose from to run the core of your business. Trusted by over 180,000 customers, their products help streamline your work for maximum productivity. They have been seeing rising adoption trends in thanks to some new artificial intelligence updates, and this was reflected in their last earnings report back in November. Their third quarter revenue grew 38% year over year to $189 million, which was impressive growth, but not nearly impressive as their earnings per share coming in at 64 cents, more than triple analyst expectations. They saw their number of customers with more than 50,000 in annual recurring revenue grow 57% year over year and achieved record quarterly free cash flow. One 5-star analyst at JP Morgan recently added the stock to a focus list as a growth idea. The analyst strongly believes Monday presents a unique opportunity for investors looking to get exposure to a quality, multi-product, durable growth at scale story, and they see variables that could drive upside to the model, including new product innovations, artificial intelligence monetization, future pricing adjustments, and volume-based price components. The Monday.com stock also has 15 analyst ratings, coming in as a strong buy with 12 buys and 3 holds. And an average price target just shy of $214 would imply an upside potential of over 9%. Down below, we can see that JP Morgan rating with an upside of over 12%. On the low end, we do have a hold with a downside at 8%, and a high-end price target from Goldman Sachs with an upside of nearly 38%. And third on our list today is a company called DynaTrace. Their stock trades under the ticker DT, currently priced at $54.74 per share. They've seen growth of over 41% in this past year, including upside of 17% in the last 3 months. They do score a 7 out of 10 on the TipRanks Smart Score. DynaTrace offers a software intelligence platform purpose-built for the enterprise cloud. The firm's platform utilizes artificial intelligence at its core and advanced automation to provide answers, not just data, about the performance of applications, the underlying hybrid cloud infrastructure, and the experience of the customer's users. They specialize in cloud ecosystem integration, incident and alert management, and user experience and business intelligence insights. DynaTrace did come out with an earnings beat in their last quarter back in November, and along with that, they also increased their fiscal 2024 guidance. For their third quarter, they reported revenue of $351 million, which did grow 24% year over year, and earnings per share of 31 cents came in 4 cents ahead of analyst expectations. The company also saw their total annual recurring revenue grow 24% as well. Following that last earnings report, we did have a 5-star analyst from Truist Financial who weighed in on the stock. They noted that their buy rating is largely due to their increasing optimism on the company's future prospects, especially in light of their new product and go-to-market investments. They acknowledged the company's recent effort in releasing several new products, which they anticipate will bolster renewal rates and drive growth in the average new logo annual recurring revenue. The DynaTrace stock almost comes in with unanimous buys. With 17 current ratings, we just have 1 hold. And the average price target of over $64 per share would be an upside potential of 17%. Down below, we can see some recent 5-star analysts weighing in just the past week. On the low end, we do have a hold from back in November before their earnings with a downside of over 8% and a high-end price target here from Goldman Sachs at 163%. So there we have 3 technology stocks, all recently picking up buy ratings from some top-ranked analysts. Let me know your thoughts on these 3 companies in the comments down below, whether any of them caught your eye, or what other tech stocks have you excited right now. I always love hearing from you guys. Keep in mind these videos are never a suggestion to buy or sell any specific stock. Please make sure you always stick to your own investment plan. Thank you guys so much for watching. Have a great day, and I'll see you back here next time.